Good afternoon. I want to thank everybody for calling in and logging in today for our webinar on 4 reasons to fall in love with a self-directed IRA. Of course, playing off the Valentine's Day theme today a little bit, but hopefully to give you some great information on self-directed IRAs, whether you're somebody who's new to self-direction, or hopefully even people who are familiar with self-directed IRAs, giving them some more information, things to think about with ways and different things you can do with your retirement account. If you're participating live today in the webinar and you have questions for me as you go along, please type those questions into your chat box on the screen. I'll make sure I get those answered. If you're somebody who's listening to a recorded version of this webinar, please write your questions down as we go along, and my contact information will be at the end of the webinar for you to reach out to me and let me know what I can help out with. Hopefully everybody can hear me. If you can't hear me on the live seminar, try calling into our 800 number, 866-740-1260, and use access code 581-9853, or otherwise you should be able to hear it through your computer speakers as well. My name is Scott Maurer, the Director of Business Development for Advanta IRA. I've been a member of the Florida Bar, so I'm a licensed attorney. I've been with Advanta now over 10 or almost 11 years now, working for the company. Spent a lot of my time initially working for the company, doing transactions, helping people through the process of buying and selling assets within their IRA account, and going from the contract, say, to the closing of a particular real estate deal. I've spent more of my time the last few years doing more of the business development side, giving presentations, giving speeches to various groups as we go along, on kind of what you can do with self-directed IRA accounts, what's possible, what the rules are, whether that's a group of investors or groups of CPAs or realtors as well for continuing education. Just a quick disclaimer on Advanta IRA. We do not provide any investment advice. We do not endorse any products. So when it comes to making investments in your IRA account, our job is to act as a record keeper and make sure that the assets get properly titled, make sure as well that the client's approving each step of the way. But as far as whether or not an investment's a good or bad idea, from a tax standpoint or from a legal standpoint, we would refer you to attorneys, accountants, other financial advisors before entering into those investments. It's up to you, the client, to perform any due diligence that may be necessary. Now, just a quick background on Advanta IRA. We've been around since 2004, and the only thing that we do at Advanta is the record keeping and administration for qualified money and people buying alternative assets within their IRA account. We don't handle any non-qualified money. When I talk about qualified funds, I'm talking about IRAs, old 401ks, basically retirement funds that have been designated as such. Our company, we are focused primarily we have a big focus on customer service. So we give every new account assigned to an account manager, one person who will be that liaison between the client and what they're looking to do here at Advanta. It's that one point of contact. Not all companies do this. A lot of companies will have you call onto an 800 number, but we give that much more personalized service to have one representative for you that you can call, that you can email to get questions answered for your retirement account. Before we go into the presentation, I want to just highlight a couple of upcoming events we have at Advanta IRA, both in our Tampa and our Atlanta offices. Next Tuesday from noon to 1, we have a webinar. We're going to have Dyke Spotiford, who's a real estate investing guru, come on and talk about different ways to be a savvy real estate investor. That webinar will be, again, next Tuesday from noon to 1. And then also next Tuesday up in our Atlanta office, we'll be doing one of our brewing success events where you can come. If you're in the area, make sure to RSVP. Free beer, free food, great network, and we have a speaker lined up for that event as well. And then on the 24th of this month is the next opportunity for one of our live seminars, either again in our Tampa or Atlanta office, being able to, with Atlanta, getting to know self-directed IRAs, getting some of the basics, and with the Tampa Lunch and Learn, taking control of a checkbook IRA and showing you how to use a checkbook LLC with your IRA account. Both of those are lunch seminars. Again, you need to pre-register for those. You can do so on our website. We provide lunch for whoever attends, and it's a great learning opportunity as well. And then on March 14th, a couple weeks, about a month from now, our next Brewing Success event for our Tampa area. It's actually going to be in the St. Pete, Sarasota area. at the Motorworks Brewery that's in Bradenton. So make sure you join another free event, free pizza, free beer, and again, great networking, great learning opportunities. Now, today's webinar, again, was how to fall in love with a self-directed IRA, and especially the 4 things that you need to know about self-directed IRA accounts. And so we're going to discuss those today, and really the 4 key points we'd want you to take away from the class today. Really, why are people self-directing? Why the attraction to self-directed IRAs? What do people have in common who are self-directing their retirement account? The different plans that can be self-directed, make sure everybody understands kind of what money you might have access to that can be used with a self-directed account. The diverse alternative investment options, what can you do with that money that is in your account? What can you invest it in? And also then the relationship between Advanta IRA as your IRA administrator and you and your account. Kind of what's the play? How does that work? And we'll go through a case study to illustrate a couple different ways you can involve your self-directed IRA to make an investment and the different role that Advanta would play in that particular investment. So in general, why haven't people heard of self-directed IRA accounts? I'm talking here about what makes people attracted to them. We'll get to that in just a moment. But why haven't people heard about them in general? I think the biggest reason people haven't heard of self-directed IRAs is simply that most retirement custodians, whether it be a bank or a brokerage firm, offers their client limited investment products. You can buy mutual funds, you can buy stocks, bonds, a CD at a bank, but they don't allow you, and they're not going to tell you that you can invest into real estate or into notes and some of the things we'll talk about today. So most people have not heard about self-directed IRAs because their current providers are not going to advertise to them that they have other investment possibilities outside of what that particular custodian is offering. It wouldn't make sense for you to go to a hamburger fast food restaurant and they start talking to you about going to get a chicken sandwich if it's not something they offer. Again, it's same kind of principle involved. If they don't sell or allow for this type of investment, they're not going to advertise it to you. And most people, a lot of people, do not go looking for this. They kind of go to their advisor, they go to their brokerage firm and say, what are my investment options? And that person simply is going to roll off kind of what they have access to with that company, not the different possibilities that are actually out there. IRS regulations allow for a very broad range of investments. Okay, we'll go over some exclusions and some prohibitions a little bit later, but IRS regulations allow you to invest in quite a different number of investments. There's a lot of broad range, but they don't require, though, the issue is that the IRS does not require each custodian to hold every type of investment. So a bank can decide to hold just a CD or a money market account. Or a mutual fund company say, we're only going to hold the mutual funds that we sell. And at Advanta, we will allow you to invest in anything that you'd like. Pretty much the only assets we don't hold are those mutual fund, those stock, those kind of like publicly traded investments. So we kind of fill that niche in the market. So really the attraction that people have to self-directed IRA accounts kind of fall in maybe one or multiple of the buckets here on the screen. For some people, a self-directed IRA is just a new source of capital for them. So if you're looking to invest into real estate or you're looking to invest into a private fund that's come available, the IRA to them is just a new source of capital. They may already be doing real estate investments, so they may already be investing into private funds. The IRA just gives them a different bag of money to access. A lot of people don't realize that their IRAs can be used for these types of investments, and once they found out they can do it, that's great news for them because this is just an additional place that they can grab some funds to make an investment. For others, the investment is because they're making it through an IRA, because when you invest through an IRA account, those investment gains, the increase to your portfolio, happens on a tax-deferred or possibly a tax-free basis if you're talking about a Roth IRA account. So making that investment into a private fund or into real estate or into gold or silver, your gains within that account are going tax-deferred or tax-free. So if you're in a high tax bracket now personally, or in a higher tax bracket than you may be in retirement, making this investment through your IRA will have no tax impact to you now, and you can push those tax savings down the line. Another attraction I think we've seen most commonly in the last few years are people that are tired or frustrated by the stock market. The stock market ebbs and flows, it goes up, it goes down, and people are getting tired of kind of being subject to what's happening in the market and having their retirement account be subject to what is going on with things that they can't even control. Being able to take your funds in your IRA account, putting them into an investment that you understand, that you have a greater degree of control over, is attractive to a lot of people. So again, one of these three reasons, or possibly multiple, why we are seeing people move towards self-directed IRA accounts. They're finding out that this is possible. It's a new source of money for them to use. They don't have to pay taxes on the gains, and they're getting that money away from the stock market and not have to worry about what is going on in the world that affects their 401k plan. So when you self-direct, you get, in a sense, true diversity. You're not diversifying among mutual funds or across different types of stocks or bonds. You're getting diversity on completely different asset classes. Again, buying real estate or buying notes, gold, silver, again, the private placements that you see. And again, it's about choosing an investment that you understand and one where you think that return is more acceptable. If again, stock market returns can be high one year and very low the next year, and maybe looking for something that's more a consistent rate of return. But again, also choosing an investment that you may understand. You might have a friend who is working for a private hedge fund, and he explains to you how that hedge fund works and how that hedge fund gains money and gains income for their investors, and that might make sense to you. And so that investment is one you might want to do through your IRA account. Also, the fact you get to invest in tangible assets. Instead of buying a fund, instead of buying a stock that's a piece of paper or it's just registered electronically, you can invest in something that you can see, that you can touch, and that you know exists. Again, as we go through the seminar today, if you have any questions, please make sure to type those into the chat box on the screen, and we'll get to them as you bring them up. Now, again, the second key point to take away from today's class is really what different types of plans are available to be self-directed. You have your different types of IRAs, your traditional, your Roth, your SEP, your simple IRAs. You have solo 401ks. If you're a sole proprietor, you own your own business, that's a plan that's of particular interest. Or education savings and health savings accounts. So I'm going to go into some of these accounts in a little more detail as we move forward. The other type of accounts that are not listed on this screen that you can to keep in mind are your 401ks, your existing 401k, maybe your old 401k with a previous employer, a 403b plan. If you're no longer working for an employer and you still have a plan with them, you can roll that money out into a traditional IRA and then in turn self-direct it. And then speaking about the traditional IRA, this is probably the most common type of IRA account there is. It's been around since 1974, and anyone who has earned income. So if you have a job, you have W-2 wages, or you own your own business and you take a salary, anyone who has earned income can contribute to a traditional IRA account. There are no income restrictions. As long as you have that earned income, you can make the contribution to the traditional IRA. If you make a contribution to a traditional IRA, you get a tax deduction. So you're going to lower your current tax bill. When you make that contribution to the account, you generally speaking will get a deduction, and that money is going to grow tax deferred. So as you invest and reinvest within a traditional IRA account, you do not pay any taxes at all. That money continues to compound, but you don't have to pay taxes each step of the way. Your funds will compound much more quickly. Now, again, I mentioned it a moment ago, but one of the biggest reasons why traditional IRAs are the most common type of IRA is that any former employer's plan, again, whether it's a 401k, a 403b, 457, a thrift savings plan, those accounts can be rolled directly into a traditional IRA with no tax consequence. So if you work for the government for a number of years, you work for a private employer, and you leave that employer, you could take that money, move it to a traditional IRA, suffer no tax consequence, but then be able to invest that money into many different assets than otherwise would have been available to you. So traditional IRA, you get a deduction up front. You will pay taxes when you pull the money out in retirement. You get that benefit of tax deferral over time. Now, the Roth IRA works the inverse. In the Roth IRA, you make contributions to a Roth IRA. You do not get a deduction on that initial contribution. So it does not help you at all up front in making that contribution to the Roth. You do not get a write-off when you make that contribution. But the benefit of the Roth is if you forego that initial deduction by putting the money directly into the Roth, that money that's in that account as it grows is growing completely tax-free. Once you get to retirement age with a Roth IRA, anything that's been accumulated in that account, your contributions and your earnings over the year, that money is all going to be eligible to come out to you completely tax-free. That's why a Roth IRA is so powerful for individuals who are doing planning, knowing that the money you put in, you'll pay taxes on the money up front because you're not going to get a deduction, but you'll never pay taxes on that money again. It'll continue to grow. It'll continue to invest. You don't pay taxes as you invest it. And then when you get to retirement age, that money comes out to you completely tax-free. There are no mandatory withdrawals as well with a Roth. With any other type of retirement account, the traditional IRA, a SEP IRA, or a 401k, the IRS does require you to take a distribution at age 70 and a half. It's called a required mandatory distribution. With a Roth IRA, there's no taxes going to be due, so therefore there is no requirement that you ever have to take money out of that Roth IRA account. Now, if you do have money in a traditional IRA or a SEP IRA, you can convert it into a Roth by taking it out of the traditional, putting it into the Roth, and paying taxes now on the amount that you move over, and then have that money growing tax-free. That's a little bit more involved scenario. If you have questions on converting, please give us a call. We'll be happy to walk you through what that looks like. Now, the other types of IRAs and some of the other accounts we have, I put them all into the category of being an employer-based account. People who own their own businesses, whether it's they're sole proprietors, whether they have just a few employees, the individuals here can benefit from either a SEP, either a SEP IRA or a simple IRA, or also by setting up an individual 401k plan. These accounts have much higher contribution limits than do a traditional or a Roth IRA. So if you do own your own business, you'd want to talk to your tax advisor about a SEP, about a simple, or possibly doing an individual 401k plan. It allows you to, again, contribute a lot more money in a given year than do the traditional and Roth. So if you haven't gotten started yet, or you don't have enough saved for retirement, and you're self-employed, these accounts can be a great way to get things started. Now, as far as which one of these would be best for you, talk to a CPA, talk to an accountant on what would fit best for you and your business, and especially if you have any employees involved. If you do have employees involved, a SEP or a simple, there are certain people you can not include underneath those particular accounts. Now, again, the people who would benefit from these accounts would be, again, owner-only businesses, people who are self-employed or have a sole proprietorship, or maybe they have a family-operated business, or if your business has excludable employees. Okay, so if I have my own business and I have some employees, there's certain employees, they have to meet a certain threshold before I would have to include them underneath the plan. Currently, you can exclude any employee who's under the age of 21. For a SEP or a simple IRA, they have to work for you a certain amount of time. So for a SEP IRA, somebody has to work for me at least 3 out of the last 5 years in order for me to have to contribute to them to a SEP, and it's 2 years for a simple IRA. You can also have a solo 401k plan if you don't have any employees who work more than 1,000 hours a year. As long as they don't meet that threshold, you don't have to include them in your 401k. So again, in looking at which of these plans might be best for you, if you are self-employed, you own your own business, talk to your tax advisor. They can look over your employees, see who would be included, who you would have to include in order to have that plan and keep it in compliance with the IRS. So the contribution limits for these different types of accounts are listed on this screen. As you can see, for a traditional and Roth IRA, the annual limit is $5,500 a year. If you are self-employed, a SEP IRA, you can put up to $54,000 a year. With a simple IRA, you can defer some of your salary at $12,500 of your salary, plus do an employer's match on top of that into a simple IRA. Or in a 401k, if you own your own business, you can put in up to $54,000 a year as well. So again, the SEP, the simple, and the 401k, again, if you're self-employed, you just have a much higher contribution level in order to get funds into those accounts. And you can see the contribution levels for an ESA and HSA as well. Now, again, if you have any questions as we're going through the presentation today, please type them into your chat box on the screen. I'll make sure to get those addressed as we move forward in the presentation. Now, if you already do have money in an IRA account or in a 401k with a with a bank or the brokerage firm, the question then is, how do I get that money moved into a self-directed IRA and keep it tax protected? And there's 2 different ways to move funds, and which one you use depends predominantly on which type of an account you have that you're moving from. So if you have an IRA account with another brokerage firm or bank, you have an IRA, you have a Roth IRA, to move that money from that account to an IRA with Advanta, you would do so by doing a transfer. It's a trustee-to-trustee movement of funds. The money goes directly from that other account to the account with Advanta. And since that money doesn't touch your hands, it's a non-taxable event. It doesn't get reported to the IRS. The money just goes from one account to the other. Again, a tax-free movement of money. You can transfer money between IRAs as often and whatever you'd like as well. There is no limit on moving money. You just have to do a form each time to go from one company to the other and make sure that the money doesn't touch your hands. The other way to move funds is if you have an employer's plan. So you do have a 401k, a 403b, or a TSP plan with a former employer. The method for moving those monies to an IRA is called a direct rollover. You would contact the administrator of that 401k plan and request that they send the money to the IRA account. And again, in this situation, the money does not touch your hands, so therefore it is a non-taxable event. There is some IRS reporting that goes along with direct rollovers. Those get reported either by your resigning custodian or your new custodian to make sure that the IRS knows it was still a non-taxable event to you. So transfers are from IRA to IRA. Direct rollovers are from an employer-sponsored plan to an IRA. So those are two methods of moving funds between accounts, again, that keeps that account tax protected. We did have a question pop up on the screen. Said, if I have an employer's 401k that I max out but I'm over 50, can I contribute the $6,500 to the self-directed Roth IRA account? That's a great question for your tax advisor, because as far as whether or not you max out your employer's portion, employee portion, you still may be able to contribute to the Roth IRA. The one thing you'd have to check with on contributing to the Roth IRA is your income limitation as well. The Roth IRA does have an upper income limit. If your adjusted gross income is above certain thresholds, you cannot contribute to the Roth IRA. But if you're maxing out your employer's 401k to the full $54,000 a year, I do not believe you'd be able to contribute to the Roth after that. But if you're only maxing out your salary but your employer is not contributing, I believe you can also then make a contribution to a Roth IRA. But that's a great question for you to ask your tax advisor, whether it's an accountant or a tax attorney. We can always provide referrals to those if needed as well. So the third point in today's webinar we're going to discuss are the diverse alternative investments, the different things you can invest your IRA account into. And again, most people are familiar with the stocks, the bonds, the mutual funds, but there's many different types of alternatives that people, again, are finding out more and more that you can do with your IRA account, that you can make as part of your portfolio. Put those in three categories that we'll talk about today: kind of real estate, notes, and then kind of a catch-all with the other investments that we see and we hold at Advanta IRA. Now, the most common investment type, the most common investment class that we see at Advanta is an investment into real estate, whether that's somebody investing into a piece of raw land, someone buying a commercial or residential rental property, whether it's a condo, it's a single-family home, duplex, it doesn't matter. Whether you're flipping a property, you're buying a house, buying a property to get fixed up, put back on the market, and hopefully sell at a nice profit. All of those investments are permitted within an IRA account. And again, so those are things, again, that the brokerage firm or bank are simply not going to hold. It's real estate based investment. And this is people buying the hard asset, wanting to buy the actual property and getting a deed. In fact, if an asset has a deed to it, your IRA can make the investment. Now, key thing to remember if you're looking at buying real estate in an IRA account is it has to be strictly for investment purposes. It cannot be something you want to live in, cannot be your vacation home, your second home, or a primary residence. It does have to be for investment purposes only. Another category of assets that we see, or I would put in a category of being some kind of lending instrument. Your IRA making a loan in the form of a mortgage to a third party. Your IRA being a bank, lending money in the form of a mortgage where you have a secured piece of property securing that loan. Whether you're investing in tax liens, where you're, in a sense, with a tax lien lending money to the government and purchasing the delinquent tax bills, the property tax bills, and having the owner of the property then having to pay you interest to satisfy and remove the lien from their property. Your IRA can invest in unsecured notes, as an alternative to having property with collateral or a note with collateral. You can invest in an unsecured note. Your IRA simply lends money on the promissory note. Simply, the individual signs a note to your IRA account, and that's really the only asset. The only security you have is their signature on a piece of paper. There's also debenture notes, option contracts, assignments. People can lend money to other individuals and do some joint venturing. If you have a partner or someone who wants to buy a property, for instance, to flip, but you're the individual with the cash, you can lend them the money and agree to split profits instead of structuring it as just simply a promise, basically as a straight note with interest. You can also invest in accounts receivable as well. So there's a number of different lending instruments in addition to real estate that we see at Advanta IRA. And there's also kind of, again, our catch-all category, LLCs, partnerships. You can invest in farm animals, movie projects, precious metals, foreign currency trading accounts, private stock. The list really does go on and on. There's a couple things we'll talk about that you can't do here in just a moment. But again, the kind of thing that all these assets have in common, whether it's a farm animal, a piece of real estate, or mortgage loan, is that most custodians, most brokerage firms won't hold this type of asset. And again, at Advanta IRA, we don't sell any products at all, so we don't necessarily care what it is that you buy. We just need to make sure that it gets purchased correctly, it gets properly titled for that particular asset. Had another good question come up in the chat box. So again, if you have other questions, please get those typed in. When purchasing real estate, can the property be purchased with a mortgage? For instance, $100,000 property, the IRA puts in $20,000 and then gets another $80,000 borrowed via a mortgage. The answer to that question is it depends. Whenever your IRA is looking at buying real estate, most of the purchases we see are for cash. Not a lot of financing involved. The reason being is if you were looking at financing, the way the IRS rules that we'll talk about here in a moment are set up, is that the loan to your IRA account in this particular example, if your IRA makes that down payment of $20,000, then your IRA itself has to borrow the remaining amount of money, and you as a disqualified person are prohibited from guaranteeing that particular loan. So the loan has to be from the lender to the IRA on a non-recourse basis. The bank has no recourse against you personally for that particular mortgage. So it is possible to do this type of loan, but you have to find a lender who's willing to do non-recourse financing, and then having your IRA make the down payment. Your IRA then takes out the mortgage and pays that back. So it is possible, but that's something I encourage somebody to give me a call. Another question popped up, could that lender be a relative? If the relative is not somebody who's disqualified, potentially. We're going to go through disqualified persons here in just a moment. Another question came up, said, what about investing in currencies with your IRA account? You can invest in currencies. We've had people buy different denominations and different currencies around the world. It certainly is possible for your IRA to purchase those, whether it be Iraqi dinars, whether it be individuals investing their money into British pounds. You can certainly hold the actual currency, or we've had other people do the Forex accounts, which is foreign currency trading, where you can actually buy and sell currency on a daily basis between a number of different types of currencies around the world. So again, there's a lot of different possible investments you can make inside a self-directed IRA. The IRS says there's only two different things you can't purchase within an IRA. One is life insurance, and the other is collectibles. So life insurance would be, obviously your IRA cannot hold a life insurance policy or any kind of viatical settlement. And then collectibles include your antiques, artwork, alcohol, rare stamps, rare coins. Now, there are some exemptions for some coins that are allowed. If you are buying an American Eagle, gold or silver American Eagle, where the value of the coin is based on simply the current trading value of the metal itself, those would be permissible. Another question just came in, can your IRA buy or sell Bitcoin? Yes, your IRA could invest in Bitcoin as well. And that's a great question for that individual who asked to give us a call, because there's a certain way you'd probably have to do that, but we have had clients invest in Bitcoin as well. We're talking about with the collectibles are more the rare coins, 1930s German mark or an 1800s you know, Russian ruble or something like that would be considered to be a collectible because the value is based on the fact that the coin is rare. But if it's coin that is, if it's again American silver, gold or silver eagles, other types of Krugerrands, bullion bars, where the value again is the value of the actual metal, those are permitted within an IRA account. Now, the other disqualifications that an individual has to be aware of, and this came up in the context of the question we just had, where can the lender to an IRA be a relative? The IRS says not only you can't purchase life insurance and you can't buy collectibles, but your IRA also cannot deal with certain disqualified persons. And for your IRA accounts, the disqualified persons include yourself as the IRA owner, your spouse, your parents and grandparents, your children and grandchildren, as well as spouses of those descendants, so your son-in-laws and daughter-in-laws are also prohibited, and then any business or entity that is owned or controlled by one of these parties as well. So your IRA, in short, cannot be on the opposite side of a deal where your IRA, if your IRA was borrowing funds, and pursuant to the example we just had in the chat box, if your IRA was borrowing money, the lender could not be one of the individuals named on this screen. Again, you can't lend money to your IRA. Your spouse cannot lend money to the IRA. Your parents, your grandparents cannot lend money to your IRA as well. In the context of real estate investing, if you personally owned a piece of real estate, you cannot sell it to your IRA because that would be your IRA buying property from you as the IRA owner. And some people are surprised that people who are not considered to be disqualified, brothers and sisters, are not lineal descendants. They are out to the sides of your lineal tree. Aunts, uncles, cousins are also not disqualified. However, with aunts, uncles, cousins, brothers and sisters, you still would want to deal with them on a fair market basis. If you were dealing with a brother or sister and giving them an investment deal, or you were making a transaction with them with your IRA account that you would not do with any other party, the IRS could still consider that to be prohibited. Even though they're not disqualified, you may now be personally benefiting. And the example I always use, if I wanted to lend money to my sister at 1% interest over a period of 30 years, that does not make investment sense. Okay, because I could put that money into a bank and a CD and get a much higher yield, and it's probably not an investment I would do with anybody else. And so in that situation, I'm probably benefiting by doing something nice for my sister, and that would be considered to be prohibited as well. So if you're going to be doing a transaction, again, they go back to the case study in the chat box. If your lender is an aunt, uncle, or cousin, they can lend money to your IRA, but you want to make sure that that loan is relatively on a fair market value basis. So now I'm going to go through and talk about the last point of the webinar today, and that's really the relationship between you and Advanta, what the process looks like for investing your IRA into assets. Kind of what role does Advanta fill, what role do you, the client, have, and kind of what the responsibilities of each going forward. And we're going to go through this example two different ways. Someone looking to buy a piece of real estate. So the facts are going to be the same. We'll just go through two different ways of buying this particular asset. So the case study involves Joe, who has money in a traditional IRA, and he wants to invest in real estate, wants to go out and buy properties, get them fixed up, get them ready to rent, and have that rental income flowing back into his IRA account. Buys a property, he can buy it for sale for $100,000 and get an additional $20,000 or so he'll need to get that property fixed up and ready to rent. So he's got more than enough cash in his IRA to cover it without needing any financing. And afterwards, he thinks he can get some good cash flow coming back into the account after it gets repairs. So how does this work? How does Joe buy the property? What are the roles that Advanta fills, and what are the roles that Joe is going to have to fill in buying this property? Now, the first kind of way we'll look at this example is having Joe buy this property directly through Advanta as the IRA administrator. Okay, well, we're gonna receive rents, receive income, and pay bills on behalf of his IRA. So the first step for Joe would be to open up and fund his account. Contact us to get our paperwork, get the account opened, complete the application, and also initiate the transfer or rollover of funds from his other custodian. Now, typically, we would have an account number issued within 24 hours, at which point he can then use that account number on any paperwork that he's having drafted. Now, if he's buying this piece of real estate, he's going to want to make sure that, again, it's Joe's responsibility to identify the property for purchase and lets us know. Joe's account manager would then work with him to make sure that the contract gets written in the name of his IRA account. So Advanta IRA, for benefit of Joe Smith and his IRA and his account number, would be listed as the buyer on that real estate contract. So Joe sends that contract over to Advanta to get signed. We will just want to make sure that Joe has initialed off on it first. Once that happens, the contract is signed, executed, sent back to the escrow agent, and the escrow deposit can also be issued from the IRA as well. So if he's transferred over cash into his account, we'll sign the contract, send the $1,000, send the $2,000 out for that earnest money deposit as well. Now, our job then, from that point going forward, once the contract is binding and the escrow deposit's been sent, is we will work with the title agent or with the attorney that's involved in the closing to make sure all of the other documents, the deed, the HUD statement, I guess it's now the TRID statement, the title policy, et cetera, all shows the name of his IRA as the buyer. So the wording that's in red on this screen, the Advanta IRA FBO Joe Smith's IRA account, that wording needs to be present on all of the closing documents. And again, our job in the relationship with the client is to make sure that that wording that appears on all of the closing documents, and also then ask Joe to then review and approve all of that closing documents for us. So we'll make sure the titling's correct. Joe's going to need to make sure that the numbers are correct on the settlement statement that Joe has approved of the title policy as well, and all the conditions there as well. Going forward, again, we will complete the closing. So once Joe has reviewed and approved all the documents for us, we will sign off on the closing documents and wire the funds to closing. So Joe's going to be involved in approving the whole transaction, but it is up to Advanta to sign the documents and send the funds out of his account. Now, after closing, so the property has been purchased, the piece of real estate is now inside Joe's IRA account. It is up to Joe to find the tenant and direct his tenant to send rent checks to us to deposit back into his IRA account. His tenant can make the rent check payable the same way. Again, Advanta IRA FBO Joe's account, mails it to us, we deposit it to Joe's account. Any expenses, the taxes, the maintenance, insurance, any expense related to this piece of real estate would need to be paid by his IRA account and would be paid by Advanta from cash in the account. So again, Joe moved over $150,000. Only $100,000 went out for the closing. The other $50,000 is there to be dispersed at Joe's direction. So Joe would send us the bills for the repairs that needed to be done. He would send us the annual tax bill, send us the insurance, and directing us to pay that, and we would get the check cut out of his account and then sent to the appropriate vendor to complete that particular expense. Joe can track all of his activity online by using our online account access, and our system will also notify Joe through email anytime money comes into his account or money leaves his account. So he can simply check his email. If he sends us a bill, he'll get an email later that day or the next day stating that bill has indeed been paid, and he can track the activity that way as well. So in this particular instance, Advanta is acting as the record keeper and administrator. We're receiving the money into his account, sending the money back out to pay any expenses as well. So Joe's IRA just continues to grow through rents and profits. If he were to sell the property, again, he can hold this property indefinitely and just continue to rent it. Or if somebody came up to him and gave him a good deal to sell the property now, he could certainly sell it, and the profits coming back in to his IRA account. Now, we had another good question come up on the chat box. How would an LLC figure into this scenario in order to bring liability protection to the rental house investment? That's a great question, because the next slides we're going to talk about is using an LLC to buy this particular property and how that process is a little bit different. Now, to answer the question directly, we'll go through the case study of how an LLC works. Many of the reasons why people use an LLC is not necessarily with their IRA, not necessarily using it for liability protection, but more so to get greater control over the funds, get what they call checkbook control for their IRA account. You can talk to an attorney. Again, we don't make recommendations either using an LLC or not at Advanta, and how much liability protection that would give you. But if you like to buy property through an LLC, these are the steps that you would take. The first step, just as it was with buying the property in the name of the IRA, the first step is always to get the account set up and get it funded. Again, completing the paperwork to open up the IRA and request a transfer or rollover from your other custodian. Again, we would have an account number issued in less than 24 hours. The next step, if you remember from the last example, was for Joe to get the contract drafted in the name of the IRA and have us sign off on the contract. But if he decides that he wants to buy property instead using an LLC for his IRA, his next step after opening up the Advanta account is to form an LLC with the Division of Corporations in whatever state he's looking to set up this LLC in. So he's going to choose the state that he wants to set up the LLC in. He's going to choose a name for the LLC. He may use an attorney, a CPA, or some other legal service to file the articles with the state. Now, the articles documents, those are the what you file with the state where you're setting up the LLC, that simply puts the name of the LLC on record with the address and who the managers are. So the articles will name Joe or potentially another individual as manager of that particular LLC. The articles that are filed with the state should not mention the IRA account at all. That's something, again, important just to note. The articles don't mention the IRA. The articles simply mention the name of the LLC, the address for the LLC, and who the manager is. So that's step 2, is getting the LLC set up with the state. Right after the LLC is set up, the next document, this is the important document that Advanta needs to see, the next step is to get an LLC operating agreement drafted. Now, an LLC operating agreement are similar to the bylaws of a corporation. It's the document that lists who the owners are within the LLC, how the LLC is to be run, how new members may be admitted, etc. So the LLC operating agreement will list the IRA, in this case, as the 100% owner. The only cash going into this LLC is coming from Joe's IRA account, so it's important that the operating agreement show Advanta IRA for benefit of Joe Smith's IRA as the 100% owner. Okay, so you wouldn't list yourself as an owner or any other third parties. If all of the cash going into the LLC is coming from your IRA, it is a single member LLC where your IRA is listed as a 100% owner. Another good question came up: how do you find who can set up the LLC? We can refer you to CPAs or attorneys that can help you set up an LLC. You can also find one if you find one on your own, or if you have an attorney or CPA you work with now. We'll be happy to talk with them and explain kind of this checkbook strategy that we're going over here in this example. So Joe, again, gets the account set up, gets the LLC set up with the state. Usually an LLC, getting an attorney or CPA to do it, probably somewhere between $500 and $1,000 to set up an LLC. Again, depends on who you use. That's the general cost. So you get the IRA open, you get the LLC open, and then you get an LLC operating agreement drafted. And you'll have to forward the operating agreement to Advanta. So our relationship, our duties in this particular example are to review the operating agreement to make sure the IRA is listed as the owner. Now, in the last case study we went through, we were reviewing all the closing documents, the HUD statement, the deed, et cetera, to make sure the IRA is the owner. But in this case, the IRA's direct investment is purchasing the interest in the LLC. So we will want to make sure that the operating agreement has the IRA listed as the owner, and also, again, make sure Joe has approved it as well. Once Joe has approved the operating agreement, we will sign off on the operating agreement and issue a check out of his IRA to fund that LLC. Once the LLC is established, Joe will open up a bank account in the name of the LLC. He'll deposit the funds from the IRA into that LLC bank account. And then Joe, as the manager, will sign all documents on behalf of the LLC. So now that he wants to buy a piece of real estate, the contract will be in the name of the LLC. All of the closing documents will be in the name of the LLC, and John will sign those in his position as manager. So at this point, Advanta is kind of out of the process. We're out of this particular investment. The IRA was set up. The IRA was invested into the LLC. We cut a check, and at that point, it is up to Joe to manage all of the activity going forward. So Joe's going to deposit all the rents from his tenant into the LLC bank account, and Joe will pay all expenses as well. So the taxes, the maintenance, the insurance, those initial repairs will come from the cash in the LLC bank account that Joe can simply write a check for. And that's why they call this entity a checkbook control IRA or a checkbook control LLC, because it gives him that authority to simply write the checks as he needs them to make the different investments. And he can also use that cash in the LLC to invest in other types of assets as well, or establish a brokerage account, a CD, as well. So the question just came up on the chat box, and again, if anyone has any more, please get them in here before the end of the webinar. Does the activity run through the LLC, or does it still need to run through Advanta? In this particular case study, if you're using an LLC, they call it a checkbook LLC because all the activity, the income and expenses, will run through the LLC bank account. It does not have to run through us. So it gives someone a much greater degree of control over their assets and controlling the income, controlling the expenses, and not having to have everything run through Advanta. Now, with that with that comes great responsibility to make sure that you're still following the rules, that you're not commingling any money. You cannot pay yourself a salary as a manager. You can't take any personal compensation. So you definitely still want to follow the rules. And if you have more questions on this particular entity, you want to definitely attend one of our webinars on checkbook control. We have some of them coming up. We also have some archived on our YouTube page as well. Question says, so the manager cannot make any draws, or they must report the payments to Advanta. If you're using the checkbook LLC, the manager should not take any money personally out of the account. So the manager should never take a draw from the LLC. The manager simply would want to write checks from the LLC to pay any third parties. Cutting a check to the roofing company, cutting a check to the local county for taxes. The only thing you would report back to Advanta is at the end of the year, giving us an annual valuation of that LLC, kind of what the assets the LLC are holding, what that's worth, as well as the current cash balance in the LLC bank account. So again, with this type of structure, the manager, if it's the IRA owner, should not be taking any draws from that account, no personal payment, to act as that position as manager. And again, we go into a lot more detail on the checkbook structure in our webinar on checkbook control. Again, you can find that on a recorded version on our YouTube page, or just sign up for the next webinar that we have coming up on the topic. Someone says, I have an existing LLC with a property in it. It has minimal equity. Can you place that existing LLC into a new IRA? The answer is no. If you have an existing LLC, you already own that personally, even if it has a minimal amount of assets in it. If your IRA were to place cash into it, the IRS would likely deem that to be a prohibited transaction, that your LLC is now, or I'm sorry, that your IRA is buying out your personal interest in the LLC, which would be prohibited. So for that reason, you would need to set up a brand new LLC for your IRA account to invest in. So again, the 4 key points to take away from today's webinar were to, again, why the attraction of self-directed plans is growing, again, because people are finding out they have access to this cash and are coming up with different investments they want to make that get them out of the stock market from a lot of standpoint. The different plans that can be self-directed. We talked about the different types of IRAs, the SEP, the simple, the traditional, the Roth, and the 401ks as well. We spent some time on the diverse alternative investment options, the ability to buy real estate, notes, LLCs, et cetera, as well inside the IRA account. And we went through a case study in 2 different ways to show kind of what the relationship is between Advanta and you as a client, the interaction when you're making an investment and even beyond what you're going to have between Advanta and your IRA account as well. The question came up, if you're buying, again, this existing LLC that has minimal equity, which is less than the annual contribution limit, can you place that into the IRA? Wouldn't the equity be viewed as a contribution? The answer is, unfortunately, the IRS, in order to contribute money to an IRA, we talked about traditional and Roths earlier, and making contributions to an IRA always have to be made in cash. They cannot be made in assets or in equity from a particular LLC or a property. It always has to be the cash that goes into an IRA. So to answer that question, the equity in an LLC cannot be used as a contribution because IRS rules require that all contributions be made in cash. So as we wrap up the webinar today, just again, I want to remind you of some other upcoming events and a great webinar next Tuesday featuring Dyke Spotiford. I'd be happy to have you come. Just go to our website to register for any of these events. But Dyke Spotiford will be on next Tuesday to give us some of his guidance or some of his insight into real estate investing. We have our Brewing Success events coming up. Again, one next week in Atlanta, one in about a month or so as well in St. Pete. And the next live seminar we have in our Atlanta and our Tampa offices. One in Atlanta is on the basics of self-directed IRAs on February 24th. The one in Tampa will be on the checkbook control LLC that we were just talking about. We will go into much greater detail with that seminar. That is a live seminar in our office on the 24th. And again, if you're looking for other recordings, other things we've done, go to our YouTube page. Go to search Advanta IRA YouTube or just go to advantaira.com. Click on the icon for YouTube. You'll go to our page where all of our recorded webinars, including the one we did today, are available for playback. So I'll go ahead and take a couple more questions that have come in. How do you sign up for the February 21st webinar? To sign up for any of these events, just go to our website at advantaira.com. Click on the events tab, and you can just click on find a particular event you want to go to. There'll be sign-ups in those particular. As you click on the event, it'll tell you exactly how to sign up for those classes or for those events. To purchase real estate where the price exceeds the value of my IRA account, can I use other private funds, mine or others, to together buy the property? And the answer to that question is yes. Rather than getting a mortgage, you could basically do a partnership where your IRA, in this case, would be contributing some cash towards the purchase, and in some third party or maybe your personal money is used to bridge that gap. You would then be buying the property as tenants in common in a partnership arrangement. That is possible to do. The only catch to doing that is, let's say your IRA puts up 80% of the purchase price and you personally put up the other 20% with cash. Going forward, all of the income and expenses then have to be split 80-20 between your IRA and between yourself personally. Or if you're partnering with some other third party, putting up a portion of each expense personally, a portion from the IRA account. And you could not change that percentage going forward between your IRA and yourself. So it is possible to partner with your IRA with other parties. Question is, what is the cost to set up a checkbook SEP IRA upfront and ongoing? Our fees are the $50 one-time fee to open the account, a one-time $95 transaction fee to send the cash in the IRA to the LLC, and then on our ongoing, our annual fee is a flat $295 a year to hold that asset. So the cost up front, again, just $50 to get the account open and then to make your SEP contribution or to transfer money from another IRA. And then ongoing, it's a one-time $95 fee to put the money into the LLC and do the paperwork associated with that. And then the only annual fee is a flat $295 a year that we charge at Advanta. If you're setting up the checkbook SEP IRA, you're setting up the LLC, again, you might have additional costs in getting the LLC established, but that is, and maybe annual fees to a state. But as far as Advanta fees, it's just one flat $295 a year fee. I don't see any other questions now. I mean, if anyone has one, get it in here quick. Otherwise, you can reach out to me. Again, my name is Scott Maurer. My email address is here on this last slide, as well as my phone number. Give me a call, shoot me an email. I'll be more than happy to answer your questions or help get you started on self-directing. You can also visit our website at advantaira.com to sign up for those events, sign up for those seminars that we talked about just the last few minutes. Again, the website also has some great wealth of information on self-directed IRA accounts. Also, again, our YouTube page as well. Last question coming in, I'll answer. Where can I download these slides? We will send an email to you with the slides attached, so you have a copy for reference. And again, you can always go back to our YouTube page and find the recording if you want to hear the recorded version as well. So at this time, we're going to end the webinar today. I really thank everybody for participating. If you have any questions, please reach out to our office. Please go to our website at advantaira.com. We look forward to talking with you.